After 2 to 3 years of making GNC related content that referenced a future that more than likely was going to end in bankruptcy, it finally happened. GNC filed for Chapter 11 bankruptcy, and I'm happy for them. Happy for them. How can anybody be happy for somebody that filed bankruptcy? Doesn't bankruptcy mean you were a failure? If we live in a black and white world, that would be true. But we live in a world of many shades of gray. And in this world, when a bankruptcy happens, especially a Chapter 11 bankruptcy, one that is focused on reorganization, that's not always the case. That might actually be the best case scenario for a company. A Chapter 11 bankruptcy can lead a company towards a transformational plan that will create a much stronger organization. Now note, I did not say it's going to create a bigger organization, but a stronger organization. But regardless if we're talking about a stronger or a bigger GNC, either path will not be easy. Now, before I jump into the meat of the video, I did want to kind of cover just the outline of what I'm going to be covering in this video. First of all, I'm going to be giving like a brief history, why GNC got into this mess in the first place. Then I'm going to be jumping into the Chapter 11 bankruptcy filing and the restructuring support agreement that was attached to it. Also just going to be kind of covering like what's in the filing, who was included in the filing, who was excluded from the filing, who potentially could get burned in this filing. And then I'm going to be ending the video in just kind of like what's after Chapter 11 for GNC, like both details that we kind of know, and then just kind of some assumptions or predictions that I have in terms of my understanding of the situation. So first off, what led to the Chapter 11 bankruptcy for GNC? I won't go way back into the history of GNC and all the accumulation of moves that kind of got him into this trouble. What I will kind of mention right off the bat is that this wasn't something that COVID-19 caused. Anything that you read basically blaming COVID-19 is just completely wrong and does not know the GNC business. Regardless of what happened with COVID-19, and I will state that that did definitely hurt their business. I think in April and May, I think 60% of their sales in their brick and mortar stores were down. So that is something you cannot overcome. But this was something that GNC was going towards regardless. They were staring at bankruptcy for the last couple of years, and likely 2021 was going to be when they filed. So this just kind of sped up everything 6 to 9 months. Coronavirus, COVID-19 was not the reason why a great business kind of fell. It was already crumbling, and it just kind of sped up the demolition of GNC. So then what was the issue then? GNC was mismanaged for much of the last decade, and primarily it was because they were overloaded on a debt perspective. This unmanageable debt load reached, I believe, around $1.6 billion in 2016. Primarily, I think a lot of it was added on low interest debt at the time. I think they did about a $500 million share repurchase program, which if you look at it from a hindsight perspective, just not a very good decision at that time. Now, if you look at just operational wise as well, like when you have an elevated debt load, you assume if business is going really well, you don't add on that debt not thinking you're not going to pay it back. But GNC had deteriorating performance in their sales. So from 2015 to 2019, sales dropped 23% during that time frame. They also continued to add to their bloated store count just to make that number stay up as long as they could before they started the store optimization plan. And this was all on the backdrop of the VMS category, so vitamins, minerals, and supplements. One, disseminating across a lot of larger sales channels. So food, grocery stores, mass stores, club stores, drug stores, convenience stores, a lot of things substitute product-wise for vitamins, minerals, and supplements. Those retail channels then had a bunch of merchandising. That made GNC not the only store in town to buy those products. That hurt them a ton. That being said, there was also kind of another thing that was happening with like the proliferation of brands that were being created on both like marketplace and direct to consumer. So you've heard me kind of mention a bunch of different times, death by a thousand cuts. That was what kind of happened with GNC. So you had both things kind of chipping away at GNC's business. They had a ton of debt load. and they were not going to be able to service that debt load, regardless of what they did in terms of trying to sell assets or whatever else. Additionally, they were not testing or championing any like omnichannel technologies at the time. They were basically waiting for like larger sales channels to basically prove out these technologies in a much bigger scale and then instituting them in this very dangerous like innovation to parity type of a situation where you're always just trying to play catch up. That's not what you need to be doing, especially in specialty retail. I mean, specialty retail is where you need to be instituting a lot and leading the way. You should not be following the leader when anybody can choose then to go to Walmart, to go to Target and get a better experience, a better omni-channel experience than you could give them. Why shop with you? And that's kind of what happened with GNC. Now, throughout the last couple of years, if you've watched a lot of my videos, you guys know I've talked a ton around the store optimization plan. They've been trying their best to close as much of the low performing stores as possible. And I think that was like around 1,800 or so globally. They have closed over the last few years. They've tried to transition some of the corporate stores over to franchises. They've also tried their best to do a bunch of like cost cutting, cost restructuring programs corporate wise. Also sold off some important assets, international territories like the Harbin Pharmaceutical deal, and they sold off their manufacturing business to International Vitamin Corporation. Those two big transactions created around like $500 million in net proceeds to GNC to pay down some of that debt, but they still ended up having a ton of debt they were not able to service, and they kind of ran out of assets to sell. And that is what left us here. We are at Chapter 11 bankruptcy. They filed that on June 23rd, 2020 in the U.S. Bankruptcy Court in the state of Delaware, where they're incorporated at. And surprising or not, depending on how much you know about GNC and their press releases, they kind of really spun this in a very positive way. Hey, this was just a part of the master plan. We're able to now accelerate a lot of our strategic restructuring plans, and everything's going to be good. And as I stated before, this is a Chapter 11 bankruptcy filing, so they are trying to restructure their debt. In this Chapter 11 filing, this only included the U.S. corporate operations. Anything outside of the U.S. or franchises in the U.S. was not included in this Chapter 11 filing. To GNC's credit, they did file a dual track restructuring plan. I think between like 87 and 92% of the lenders actually approved this plan going into it. And this dual track restructuring plan actually had what they call a stalking horse bid from its largest shareholder, Harbin Pharmaceutical, which totaled $760 million. And you guys might be like, what the heck is a stalking horse bid? And really what that is essentially it's a bid for a bankrupt firm or its assets that is arranged ahead of a bankruptcy filing, and it essentially is to set a floor of the auction. So when you are going through a bankruptcy sale, tends to be an auction. Now, Harbin Pharmaceutical basically said, we're going to pay $760 million. So that's the floor. If anybody wants to outbid Harbin Pharmaceutical, they can do that. Odds are that's not going to happen, but it does provide a floor, so you're not going to have like extremely low bids or anything like that. The court will supervise this auction sale. If somebody wants to come in and bid something more extravagant than Harbin Pharmaceutical, they can do that. Like I said, not very likely. And while this 363 bankruptcy sale happens on this asset, GNC will be still operating a much smaller footprint than they had. They'll be closing around 800 to 1,200 stores, and they're able to continue operations because they did secure a debtor in possession loan for $130 million, basically $100 million in new money from some of the existing lenders, and then $30 million that's going to be kind of taken from a existing loan and then reclassified into a debtor in possession loan. And if you guys remember from the video before, debtor in possession loans, they're kind of the first in line when you're getting repaid. So that's even before some of the debt that is owed for the tranche B2 loan and the other term loan. GNC was also able to negotiate with their contract manufacturer now that owns the manufacturing rights to all the private label International Vitamin Corporation. They're going to have basically factoring or a float that they're going to be having to make sure that the product is going to be in stores to be able to be sold so they can continue operations. And you might be wondering, like, where does that $760 million from Harbin Pharmaceutical bid go? That's basically going to cover both the new like debtor in possession loans and then all of the kind of secured loans that were on the books. That's going to basically wipe all of that out. And then what is left is anything that is like unsecured. And what we're talking about here is things like unsecured notes payable or unpaid rent or like trade payables to vendors and things of that nature. And GNC did have a lot of that still, and that is going to be likely not paid. And I say likely because there could be some things that could be worked on in the future. But the biggest kind of portion of that was Bank of America had $158 million in notes payable. I'm assuming that was a very high interest notes payable. They were hoping that GNC was going to be able to pay that. They're on the hook for that now. Unfortunately, they're not going to be able to get that probably paid. There was also two like major rent payments that were from Simon Property Group, which was around like $4.6 million in a rent payable. They also had Brookfield Property that had about $3.8 million in rent payable. And then there's a ton of vendors on there. And if you want to look at the bankruptcy filing, you could do that. There's about 30 of them on there. The top 30, there's probably another couple hundred that are on there, but they list the top 30 just to give you guys like the top 5 so you understand the numbers in which that could be potentially like wiped off the books. Is Nutrabolt's number 1 at approximately $4.9 million. You have Nutravio, which is Rivalus Nutrition. That was around $4 million. Optimum Nutrition at $3.4 million. There's a company, Lifelong Nutrition, which was at $3.1 million, but off the top of my head, I didn't know who they were. And then a company owned by Twin Lab, which is still owed $2.6 million. So like I said, there's still a ton of other vendors that are on there, some that are owed, two point something. You got ones, a ton of them that are owed around $1 million to $2 million. So now what's life after Chapter 11 for GNC? Like probable life after Chapter 11. Now, if by whatever reason, Harbin Pharmaceutical, the sale, the 363 sale does not go through, there is an alternate kind of route that GNC will go with some of its existing lenders and just a kind of different structure that they'll do as a standalone. I'm going to guess that that's unlikely. That provides a little bit more like unclear, like what could kind of happen. So we'll just kind of assume that the 363 sale goes through with Harbin Pharmaceuticals, kind of breaking this down into like different sections, just so you guys understand, because I know there's a ton of stakeholders that watch these videos here. Corporate, like North American stores, if the 800 to 1,200 store locations close, they're all within the domestic side of corporate owned, or like the Rite Aid store within a store concept. Even if they closed like 1,200 locations, that would still leave GNC with about 3,000 of these domestic corporate owned stores. But it would be a lot towards like the store within a store concepts of Rite Aid. And I think that GNC will more than likely continue to cut some of those. That also is because Rite Aid might have some things going on with their business and a potential sale as well that might kind of create some issues in that long-term strategic retail partnership. Even at 3,000 stores, like I think GNC still needs to severely cut their store count. And that's going to sound kind of crazy. And I've been saying this for the last couple of years that they need to drastically cut their stores down to like 1,000 locations within the United States. And that's primarily because the total store counts do not need to be as big to service the same amount of people. There's a ton of different ways that you can service the same amount of people that would want to come into a store or at least shop within some like omni-channel fulfillment. There's ways to kind of service those people with not having to have like a bloated store count. And I think GNC also can put a bunch of merchandising in some of these other strategic retail partnerships that they've been doing, especially because Rite Aid restructured that contract. So now they don't have like a spatial exclusivity, like within a mile radius. I can't remember what it was exactly, but it restricted GNC from not being able to work with a lot of other retail, create kind of merchandising partnerships. But expected GNC continues to kind of close locations. I think they look at it from like a 3-prong approach. 1, is it profitable? I think that's the most important thing. 2, geographical redundancy. Again, you don't want to have a bunch of stores that can be serviced by one or two within a certain metro area. You don't need to have 34 stores within a metro area anymore. And the last one kind of around spatial capacity for omnichannel fulfillment adaptations. Like, can it be retrofitted into what the new image of retail needs to be? Now, if we're shifting this into like North American franchise businesses, US franchise businesses, this is about a quarter of the overall store fleet of GNC on like the domestic side. So it's not something to even scoff at. GNC needs to figure out this because there'll be essentially a new owner. New owners equal new contracts. And because of new contracts, that is something that the store owners, franchisees will decide, do I want to continue on as a GNC franchise, or do I want to look at a different franchise agreement? Do I want to be independent? They can go a bunch of different ways with this, but that gives them some flexibility, both on the franchisee side and the franchisor side. So they'll decide the good ones, the bad ones. They'll decide who they want to keep, be it owners or be it locations that they think are going to be great. Similarly, on the international franchise side, I think GNC operates in somewhere close to 50 markets at this point, and around a little less than like 1,900 international locations. In a lot of the international regions and markets, GNC, the Live Well kind of GNC brand, does still have a ton of equity. And because of that, GNC is going to want to continue operating in a lot of those countries and regions, especially if they have long-standing relationships with those partners. They trust those distributor partners to operate that in the country. They're going to continue those things, just like they are going to continue the operations with great franchisee owners. They're going to be continuing those things. They could also cut a lot of things. This gives them the opportunity to leave certain areas that they don't believe is going to be right for GNC. That gives that owner of those locations a decision, and they could either operate independently. They could go and start another franchise. I don't know exactly in terms of like a US based one, what has any equity. I don't think the Vitamin Shop name has any equity, or if they have any interest in doing international. I know they talked about it for like a small period of time, but I don't think there was any like follow through with that. But then we're getting into the idea of like merchandising vendors. So like the brands, the products that are on shelf. Mentioned earlier, a lot of those are going to be on the hook. They could just be completely wiped out. I would assume that GNC or whoever is the new owner of GNC is going to say, hey, I'm going to have to decide who I want to keep and who I don't want to keep. The people that I want to keep on shelf, I'm going to want to continue to make sure that is a positive relationship. You can't just like wipe all the debt away and $2 million, and then the vendor, the brand is just going to be happy to continue to work with you. They're going to make changes. They're going to move. GNC is going to have to figure out a way to make it right with them. Not to say they have to, but they could. But I think regardless, GNC relooks at their merchandising strategy front to back. So that's going to be from who they want to put on shelf vendor-wise, what categories they want to put on shelves, inventory management to make sure everything is properly set up for like what retail is going to look like in the future for GNC. Transitioning into like the leadership team, I think most of them have signed on through the continuation of the bankruptcy sale and then post-bankruptcy. I am not the biggest fan of what is happening recently with like these bankruptcy bonuses, these retention bonuses. I've made a post about this on LinkedIn that got a ton of people fired up. I just believe that if you drove the ship into the ground, you stay and you do it for the same pay. You don't get bonuses, you don't get a bunch of extras. You drove the ship into the ground, and you need to stay there to clean it up until somebody that's a lot smarter and has a bigger vision than you can do this. So GNC paid out about $4 million in retention bonuses. The CEO, Ken Martindale, I think got more than half of that. I don't know Ken personally. Ken doesn't know me personally. So I'm not going to talk a bunch of shit about Ken. But what I'll say is that I know he has a tough kind of job to kind of figure this all out. I don't want to kind of dog him or do anything like that. But what I'll say is that $2.2 million is a lot of money. And then on the other side, with like employees, that really never gets talked about all that much, unfortunately. You have all of these executives that are getting bonuses and they're trying to make sure that they can continue operations. But the people that are still in the middle of this, especially right now, like with COVID-19, they're frontline workers. They're out there dealing with people and they could potentially get sick. You don't see them really getting much of benefit. They're not getting a bunch of like bonuses or making sure that the customers are getting serviced well and everybody is taken care of during this GNC bankruptcy. That's something that I don't really like all that well. I don't really think that's right. I think, especially like during this COVID-19 and whatever, I really respected a lot of the leadership teams that took extreme pay cuts or didn't get paid at all and made sure that money was put down to the employees. If you're making multiple millions of dollars a year, odds are you are well set out. You don't necessarily need to take maybe 6 months worth of pay or a year worth of pay. I know that's easy for me to say on this side of the camera, and honestly, I'm not in that situation, so I can't say with complete and utter confidence what I would do, but I'm almost certain how I would act, and I would make sure that my employees were taken care of, because they are going to be the biggest determining factor of this success. You can put in all the different like strategic plans you want, and a lot of them need to be put in place, and I'll be the first to talk about those things because that's where my kind of world and understanding is. But without execution, without the day-to-day of the little things getting done at the store level, nothing's going to work. It's never going to work. And I think GNC has not really properly put the right attention towards the store level, the lowest common denominator, but also the most impactful to the customer experience. I don't believe that they've put enough effort in that area. And this is going to continue to show if they don't treat those people properly, be that through training and development, and be that right now when needing them to come in and perform at their best during a very kind of uneasy time. Just kind of talking about like the strategic and operational plan, talked about like right sizing the business. That needs to happen. That's going to continue to happen. And primarily it's because that each day, less and less consumers want to be an active participant in the original kind of retail business model, where a consumer will go into a store, they'll act as like the picker, they'll act as the packer, they'll also act as the final mile delivery driver. Doing all those jobs for a company saves them a ton of money and creates a ton of profitability for them. But now consumers are not so much willing to do that because they have options. They have a ton of substitutes in the market right now. They can shop just as effectively online as they can in store. And because of that, GNC needs to meet the customers where they are, meet the consumers where they are. If they want to shop at home, they need to be there. And because of that, they need to rethink about their store fleets. They need to right size their organization. They need to think, how are we going to be a true omnichannel retailer? That is through utilizing a ton of different omnichannel strategies from the fulfillment side, especially like hyperlocal fulfillment, or if that's click and collect, or a lot of other things. They can be looking at their store fleet and saying, how do we reinvent and what should our stores be utilized for? How should they look to consumers? It shouldn't just be like a warehouse that is only utilized for a customer to be an active participant in that, to be the picker, the packer, and final mile driver. GNC will need to continue to focus on private label, focus on merchandising, focus on all the blocking and tackling that needs to be done within a retail environment. That is Retail 101. Just want to end this video with just kind of some final thoughts here. I know this video was a little bit long and also just a little bit all over the place. Just a ton of different things going on that I could cover. I've covered so many different times that it was a little bit tough to like zone in on what was most important for you guys in this particular video. But the final thoughts here is that GNC was in a long kind of battle with bankruptcy. It was always going to be where they ended up, but they fought and fought and fought as long as they could. Regardless of the debt load, it was also not great that they were a publicly traded company. Because they were publicly traded, they were always at the whims of this like quarterly expectation. They couldn't move on to this like extremely drastic transformation phase, because if they did, that would really kind of hurt their bottom line. And with a lot of other things going on with their business, that would have just been a complete kind of death spiral of their stock with short sellers. GNC is not necessarily just going to be able to kind of shine everything up and put on some new strategies and get going. There's some fundamental things that are going on in the vitamins, minerals, and supplements category that they're going to need to overcome. Primarily that you have disseminated category of products that are all over the place now. You're not the only show in town, GNC, unfortunately. You're going to need to be something special for somebody to shop with you. They can get just as great merchandising at other locations. Maybe they can't get as much of education, but now with digital information being at fingertips on a supercomputer on their hand all the time, they can get just as much information as going into a store at a much more convenient way. There's also the proliferation of brands that's creating a ton of different issues with GNC. You have tens of thousands of brands that are getting created both direct to consumer and on Amazon, Alibaba, Walmart, eBay, all over the place that are just kind of cutting into the available retail market for GNC. And GNC is going to go heavy into digital, and they're going to be focusing on digital, and they've done a good job at kind of transitioning their business to focus on a lot of that digital sales, but they're not first product search. They're not where people go initially when they're looking for vitamins, minerals, and supplements. That's Amazon. It's been Amazon. It's going to continue to be Amazon. So they're not going to win a lot of that new business. That new business is going to go straight to Amazon. I know that GNC sells on Amazon, but that does not mean that they're going to get a lot of those sales. Those sales go to non-branded search terms. GNC, unfortunately, at this point, does not do very well at that. They're going to need to kind of relook at their Amazon strategy. So there's going to be a lot of work left to do for GNC to have this like happy ending. I think that there's still very strong bones. They're in a category that's growing. People still need some help with goal-oriented, like intent-driven products. There's always a place for the physical retailer. Now, will it be anywhere near the size of what GNC is going to be out of bankruptcy? Probably not. It needs to be right-sized even further in the future. But I think there's going to be a place for GNC or somebody like GNC to be filling that space within the consumer market. GNC needs to really just focus on what they can control. Some of the things I talked about, they can't control really because those are things that are outside threats, external threats that they're not going to be able to control. You can't control how many brands are getting created. You can't control how many brands are selling on direct-to-consumer or marketplaces. You can't necessarily affect like a Walmart selling more supplements and merchandising that more, or an H-E-B or a Kroger or an Albertsons. You're not going to be able to do that. So GNC needs to focus on what they can control. And that is like the experience they're giving to consumers. Like they need to be unequivocally answering the question, why are people going to shop with me over other people? If they can't answer that question every single day, they're going to be looking at a very bleak future.
Thank you so much for watching this video. If you want to help support me, make sure you guys hit that thumbs up button on this video. If this is the first time you've been introduced to my videos, would love for you guys to be a part of my community by subscribing to my channel. I upload several videos just like this weekly. And if you guys want to connect further outside of this platform, I do include all of my social media links down below. I just want to thank you guys again for your time. Hopefully I gave you some value in return, and we'll see you guys on the next video.